On a sunny day in December 2008, the world was rocked by one of the largest investment scandals in history. Bernie Madoff, a respected and influential figure on Wall Street, was exposed as the mastermind behind a massive Ponzi scheme that defrauded thousands of investors out of billions of dollars. This scandal not only highlighted the dark underbelly of the financial world, but also sent shockwaves through the global economy. Bernard Lawrence Madoff was born on April 29, 1938, in Queens, New York. From an early age, Madoff showed an aptitude for numbers and a keen interest in the stock market. After graduating from Hofstra University with a degree in political science, Madoff started his career on Wall Street in the early 1960s. Madoff's early success led him to establish his own firm, Bernard L. Madoff Investment Securities, LLC, in 1960. The firm initially focused on market making, acting as a middleman between buyers and sellers of stocks. Over time, Madoff expanded the firm's services to include investment advisory, catering to high-net-worth individuals. Madoff's reputation grew, and he became known as a prominent figure in the investment community. His firm attracted wealthy clients who believed in his ability to consistently deliver high returns. What they didn't know was that Madoff's financial empire was built on deceit and fraud. At the heart of Madoff's scheme was a classic Ponzi structure. He promised investors steady and substantial returns, even during market downturns. To maintain the illusion of success, Madoff used new investors' funds to pay off existing investors, creating the appearance of legitimate profits. This allowed him to attract even more investors and further fuel his fraudulent operation. One key element that aided Madoff in perpetuating his fraud was his reputation within both the financial industry and the community at large. He cultivated an image of trustworthiness and integrity, serving on various industry boards and positions of influence. This lent credibility to his operation and helped him maintain the illusion of legitimacy. Despite whispers of suspicion and skepticism from some within the industry, Madoff's operation continued to flourish and attract new investors. His returns were consistently high, drawing people from all walks of life who were eager to capitalize on his seemingly foolproof investment strategy. The allure of steady wealth blinded many to the underlying truth of the scheme. It wasn't until the financial crisis of 2008 that Madoff's house of cards finally came crashing down. As the markets tumbled, investors looked for ways to withdraw their investments. Unable to meet the massive redemption requests, Madoff confessed to his sons that he had been running a Ponzi scheme for decades. On December 11, 2008, Madoff was arrested and charged with securities fraud. The news sent shockwaves through the financial world as countless investors suddenly realized they had been deceived. The estimated loss was around $65 billion, making it one of the largest investment frauds in history. Madoff's arrest and subsequent trial garnered significant media attention. The public was fascinated by the audacity of his scheme and the magnitude of the losses. In June 2009, Madoff pleaded guilty to 11 federal felonies, including securities fraud, investment advisor fraud, and money laundering. In 2009, Madoff was sentenced to 150 years in federal prison with no possibility of parole. While he initially claimed to act alone, it became evident that several individuals within his firm were complicit in the fraud. Madoff's sons, who worked for the firm, turned him into the authorities after learning of his deception. The fallout from Madoff's scheme had far-reaching consequences. Many victims lost their life savings and faced financial ruin. The scandal exposed major flaws in the regulatory system and raised questions about the integrity of the financial industry as a whole. The Madoff investment scandal serves as a stark reminder of the dangers of unchecked greed and the importance of robust financial oversight. It forever tarnished the reputation of one of Wall Street's prominent figures and left a lasting impact on the lives of countless victims.